Are you an NFT artist or seller? If so, you probably know that NFT sales taxes are a hot topic across the industry. Unfortunately, it's an issue that many NFT artists and sellers are overlooking. It's imperative to get into compliance for sales taxes related to your NFT sales to protect your bottom line and your reputation. In today's video, I'm going to go over product taxability related to NFTs and how different states tax different types of NFTs and what look-through rules apply for product taxability related to NFTs. So how are NFTs taxed and how do most states look at NFTs from a sales tax perspective? Firstly, it's largely going to depend on the type of NFT that we're talking about. There have been multiple states that have identified different types of NFTs that come with different tax implications. Firstly, we have what many states, including Washington State, has referred to as a standalone NFT, which is an NFT that most people probably think of when they think of NFTs, which is just basically an NFT that's purchased and there's no other product associated with that NFT. Someone's purchasing this specifically because they want to buy the NFT. In this case, the taxability, of course, varies state to state like in every case, but in this case, the NFT is likely going to get looked at as a digital product. And the taxability of digital products will be applicable on a state-by-state basis. So there's over 30 states that currently tax digital products that likely will apply taxes to NFTs, and we've seen some of these states already apply these taxes to NFTs, such as Washington, Wisconsin, and others. So the first category to look at is standalone NFTs that are going to fall into the category of digital products, which is taxable in the majority of states, but there are states that don't tax them, so this will vary state to state. The second type of consideration, or the second type of NFT we need to look at, is when that NFT is purchased as a representation of another good or another service. In this case, we need to look through at what that underlying product is that the NFT represents, and the nature of what that underlying product is will determine the overall sales taxes applicable to the NFT. So an example of this would be if you're selling an NFT that is going to be as an admission to a crypto conference. So you're selling an NFT that's basically a ticket. Well, in this case, we're not going to look at the NFT as a standalone product. We're going to look at the underlying product that NFT represents, which in this case, it's going to be a ticket for admission to an event. So we would look then at the sales taxes applicable to that product category. In that example, in most cases, that NFT is going to be taxable just because, ticketed events are usually have sales taxes associated with it. Now, if you take that example and, you're selling an NFT and that NFT represents a piece of land, as that's representing the NFT. In that case, in most states, again, we would look through to the underlying product. In most states, land is not going to get taxed for sales tax purposes. So that NFT that's representing land is the underlying product. In that case, it's going to be excluded from sales taxes in that scenario. The last consideration for NFT product types would be bundled transactions. That's when there is a transaction that takes place where a customer is purchasing multiple items. Some of those items may be taxable, some of those items may not be taxable. The taxability of that overall transaction here is going to vary state to state, and it's also going to vary based off of exactly how you invoice those products. But in most cases, in bundled transactions where the sales price of each item is not bifurcated, we are going to have sales taxes apply there as well. So overall, when we're considering NFT product taxability, the big consideration is what is the NFT? Is this a standalone NFT? Is this an underlying product that's representing another good or service? And that is really what's going to dictate the taxability of sales taxes for that NFT. Now, building on this example, one of the states that we have the best guidance from up to this point related to NFT sales taxes is Washington State. They've taken a similar approach to product taxability like I've outlined here. So let's briefly go over some of Washington's guidance. Washington has basically identified 4 different types of NFT arrangements. The first type of NFT arrangement is just a standalone NFT product. And they've said that these types of products are generally subject to retail sales tax as well as B&O tax as well in Washington State. The second type of product that Washington has identified is a purchase of a standalone good or service that's classified as a retail sale, but the NFT is not the object of the customer's purchase, it's the underlying good or service that's taxed as a retail sale. So what they're outlining here is the example of someone selling an NFT. That NFT represents another good or service. And then basically they're saying if that object is taxable, then sales taxes is going to apply to the sale. The third category they identify is when you're selling an underlying product or service that someone's purchasing the NFT to obtain, but that underlying product or service is not taxable. In these cases, sales taxes doesn't apply. The fourth category, which I think is important to consider for sellers in Washington State, is when the sale of NFTs include royalty payments to the NFT creator or other party who retains the rights to royalties for the future sale. The gross income from these royalties is subject to B&O tax, which is a business and occupational tax. In Washington State, it's not the sales tax, but it's a similar tax that's going to get tacked onto these royalty sales. So as you can see, Washington State is taking this approach where they're looking at single NFTs, and then they're looking at, for any other type of NFT you're selling, what is the underlying product and what is the taxability associated with that? And then that's what's really going to apply when you're selling an NFT. So we've seen very similar, although less detailed guidance in other states. 2 that come to mind are Wisconsin and Minnesota, who have explicitly stated that the sales taxability applied to NFTs is going to be based off of the taxability of the underlying product, like I previously outlined. So what should you do as an NFT seller that wants to get into sales tax compliance? Number 1 is we need to determine the taxability of the NFTs and products that you're selling, and then we need to make sure that we're collecting sales taxes appropriately based off of this using an automated sales tax compliance system. So step number 1 is really consulting with a tax professional that's experienced and understands this matter, that can really give you guidance on specifically what you're selling, whether or not it's taxable. Then from there, we really want to start to use an automated solution like Digital Impost to monitor your nexus and collect your customer information and deliver the right tax rates to your customers in order to collect your taxes at scale when you're selling your NFTs. Are you an NFT seller or artist that's looking to get into sales tax compliance, but you haven't found a solution that can accommodate your needs? Look no further than Digital Impost. We're the first blockchain native sales tax software that's designed to automate the entire compliance lifecycle from mint to filing your sales tax returns. Our team is focused on serving the blockchain industry to get them into compliance with sales taxes, from collecting your customers' information at mint or checkout to calculating the correct tax rate in the native cryptocurrency that you're transacting in, to collecting all of the relevant reporting information on the back end, to automating the tax reporting to the relevant tax agencies. Digital Impost has you covered. If you need to get into sales tax compliance for your NFT business, contact me and my team at Digital Impost today.